Changed. It is 8:40 right now. Welcome back to CW Iowa Live. I am Lou. This is Jackie.
Good morning.
And joining us in the studio is our good friend Michael Jenkins. Is talk a little bit about bankruptcy and good timing on the topic of discussion today, Michael.
Well, April 15th is come and gone, and many people have found out whether they've got bad news and that they owed income taxes for this year.
Right.
And so now they're wondering, how do we pay them? Some people, it's not the first time that they've owed, so it doesn't come to a big shock for some people because it's just something that's routine that they seem to owe year after year and build up.
Do people put it off knowing that I know it's due on that day, but interest will be accrued after that if you don't pay them. But if you know kind of that bad news is coming, do people put it off?
Yeah, I mean, people not only put it off, some people put it off and just stop filing.
They stop filing?
They stop filing. I mean, we talk to people often that they got divorced and the wife always used to handle taking care of the taxes.
Right.
So they go, I didn't know what to do, so I
just didn't do it.
I just didn't do it. Or people are self-employed and things start to go bad, and so when things start to go bad, they just stop filing their tax returns, and I've never really understood why they think they should just stop filing them.
As I say, what's your recommendation? If you know you're kind of in a hole, you're in a situation of bankruptcy, obviously you're here with some great advice this morning, but what is your recommendation? To always file no matter what?
Well, in the short term, yeah, I mean, it's important to always file no matter what. I mean, short term, long term, you should file, but more importantly, as into the short term, the fact that you don't file your return on time automatically generates a penalty. So besides the tax you owe, then you're going to go owe a certain percent of that tax as a penalty for not filing your return on time.
Right.
And so if you don't get it done by the 15th, people can ask for extensions, and people often do, and I believe that gives them till October 15th to file their return.
And that's an automatic extension, too.
Yeah, I mean,
a lot of people don't realize that, but
right.
It's an automatic thing. You have to apply for it.
You have to fill out a form.
Yes.
So, I mean, people will do that, but then your interest is accumulating on the tax, except for people that routinely just owe every year and just elect not to pay, or they just can't pay. They don't plan for the fact they're going to owe and set aside money and send in quarterly tax payments. They don't really care about the interest. That's began.
They don't even think about it.
But no, it's important to file every year because if you just quit filing, eventually after a couple of years of no returns where somebody customarily did file, then the IRS continues to receive the reportings from either employment or if you've been paid as a 1099 a person who worked for somebody else and was an independent contractor or a non-employee, well, the government's getting this reported income, so the government will just take it upon themselves and go, okay, well, we're going to file a return if you're not, and they call it a substitute return. All they do, it's an estimate, and they just tax the person on the total amount of money that's reported. So if you file a return, you at least get your standard deduction and other things. If you got kids, you deduct them.
Right.
Well, you don't get any deductions on these ones that the IRS does.
They just want their percentage.
So, and then you owe. So they'll start collecting on whatever amount they say until you file something that they can review and determine is properly prepared that says otherwise.
Right.
So it's important that you file your returns. Even if you're going to owe, you should still file on time so you don't owe even more, because the penalty isn't really a minor thing, it's significant.
Well, a lot of people think if you just don't file them for the long enough period of time, the taxes would just go away.
Well, it'd be nice if that happened, but the IRS kind of
they keep track of that?
They eventually will start collecting on them. It may take them some time, but eventually it'll get to the local level, or they'll generate bank garnishments and levies where all of a sudden they send out notices to the person's banks that they are able to find out, and they just take the money that's in the accounts. If a person has a job, well, they're getting the W-2, so they'll just send a notice to the employer to start giving them the paycheck to pay the taxes with. And that usually gets somebody's attention then to try to maybe get a payment plan going. But the most important reason to file your taxes every year is because, contrary to popular belief, tax debt can go away in bankruptcy. And,
really?
There's conditions. And the most important condition is you had to file the return. If the IRS did one of these and made them up, well, those don't ever go away.
Right.
So prerequisite number one is you file the return and sign one. So that's a real important reason, probably if for no other, to do it, because someday if you need to file bankruptcy, you might be able to get out of that tax.
Wow.
Is it too late if you didn't file this year and that automatic extension kicks in and you get it done by October? Does that still count?
It still counts as a filed return.
It does.
Sure.
Okay.
I mean, if you file your return 3 years late, once you file it, it's still a filed return.
right.
So
okay.
many people have shirked their responsibility for a few years or more than a few, and sometimes they'll file 4 and 5 years all at once.
Wow.
But they're
I couldn't
filed.
imagine.
There's no flags going up there, are there?
You know, those people are in usually a bad way, but they eventually, get it done, and usually due to pressure from the Internal Revenue Service or the state of Iowa
Right.
for the state tax returns. Now, there are taxes that can go away in bankruptcy. I'm going to quickly talk about the ones that will never go away in a bankruptcy, because there's a few of those. And so if you employ people, even if you're a one-person owner and just have one employee, such as myself, you got to take out taxes for your employee's paycheck. Just like here at the station, they take taxes out of your paycheck. So they're supposed to send those in to the taxing authorities when they take out from your paycheck. So even for a small employer, when they take those out, unfortunately, many small employers, more than it should ever happen, don't send the money, and they hold on to the money. It's just part of their regular operating account, and then they're using it.
Okay, so they take the money out
Of the employee's check.
from the check that you're supposed to get, and then they're hanging on to it.
And they're using it to keep the business afloat, and those are being held in trust. They're called trust fund taxes. Well, those don't ever go away. That was money that was never supposed to be used by the person. They have a fiduciary relationship, a position of trust with the government, and so they don't ever go away. In that same regard, it would be the case with sales taxes. So when you go to a local store or a restaurant and they collect your sales tax, they're supposed to hold that money separately from the rest of the money they pay their bills with, the businesses that is, in theory, but it doesn't always happen that way. Well, if the business used that money and didn't pay the sales tax to the state like they're supposed to, well, those are never going away in a bankruptcy. So those are going to stick with the person for as long as they're around, or as long as it can be collected. So those taxes don't go away. And the other one I mentioned was if you've never filed the return for an income tax return, those aren't going away either. One other tax that won't go away if you file bankruptcy is regular income tax that's only been due for less than 3 years before you filed your bankruptcy. So right now, that would be the 2016 return that we just got done filing, the 2015 return, and the 2014. So the 14 would have been due in April of 15. So that still falls within the 3 years. So the taxes that can go away, in addition to having to have filed the return, they've got to be due for more than 3 years. The ones that are less than 3 years aren't going away. So that the most recent tax year that we're talking about that could go away in bankruptcy would be 2013. So if you filed your return on time, that would be April 15th of 2014.
Right.
We've already passed April 15th of 2017.
Right.
That's your 3 years. So if you filed on time and you owed a couple $1,000s from 2013 and you're filing bankruptcy now, those will go away. Now if you got an extension, then at least for 2013, if you extended to October 15th, well, then they weren't due till October 15th, and it's going to be a lengthier period. So you got to be, no one's really thinking about bankruptcy when this is coming up.
Right.
So you have to wait until October 15th then?
Right.
So it is the 3 years?
Yep.
Got it.
What's important is if you're preparing a bankruptcy for somebody and they do have tax debt, it's important to know, especially if it would be a 2013 tax year, to inquire at least to find out if they were filed at the original due date.
Good idea.
Or if they got an extension, because if somebody had a significant amount of tax debt, maybe $10,000 for 2013, it would be very important to delay the filing of the bankruptcy to be able to get that incorporated as
Right.
part of the bankruptcy and go away.
Didn't
If
realize
at all possible. Sometimes other circumstances are in play where it's not going to be possible to wait, but ideally you would like to do that.
So by filing for bankruptcy, some of your tax debt will go away, but not everything.
But not everything, and there's conditions now. The other condition is, so if it's more than 3 years, but you didn't file for a while, like we mentioned,
Right.
And all of a sudden someone filed a whole bunch of them at once, let's just say 2010, 11, 12, and they filed all of those maybe in 2014. So that's important. They're all more than 3 years from when they should have been filed and they were due. The other condition is if they're late, well, then the taxing authority has to have been in possession of those returns for at least 2 years.
Okay, so what if you file them all today? Say you file them all today, and you want to try to get something expunged from 2013. Would you have to wait 2 years in order for that to happen?
And when we're saying file them all today, are we talking about the ones I just mentioned?
The previous ones, yeah.
Yeah,
You didn't file forever, and you're filing 5 of them in a row.
Well, you might want to wait 2 years to file your bankruptcy if it's important for those taxes to go away.
I'm
Too many
glad you
questions.
understand all this that's going on, but there is opportunity for you if you do have some tax debt, but you need to know all the specifics, and this is the man that knows them. So, Michael, how can we get in touch with you? You
can just give me a call at 255-1855, and we can talk to you briefly on the phone, or you can find me on the internet at www.iowa-bankruptcylaw.com.
But most importantly, file your taxes.
File your taxes.
Absolutely.
All right, it's 8:51. Stick around. We will be right back. And when we return, it'll be time for Totally Serious News. Some animal stories, including a dog that got blamed for a truck driving accident. We'll talk about that next.